Hey Amaludians, I welcome you guys to another episode of One-on-One with Amaloaded. In today's video, I'm going to explain in details and also break down how you can do multi-time frame top-down market analysis. I've seen so many traders that they don't try to run their top-down market analysis from the higher time frame to understand the overall direction of where the market is going, how to scale it out. Let's say you're starting the analysis from weekly, get the overall sentiment of weekly, scale it down to daily, scale it down to 4 hours time frame, then before you get onto entry time frame. Once you master this art of running a top-down market analysis, for you to make a good decision in the market, it won't be difficult for you. And that is what I want to do, to give out this quality information to you guys for free so that you can learn some things, so that at the end of this video, your trading skill will be improved a little bit. So in today's video, I'm going to show you some of my past trade executions, the one I did this week, some of the trades that I took, and how you can also apply it in the future market opportunity. Now, please, if you are watching this video for the first time, don't forget to click on the like and subscribe button, and also turn on the notification button so that you can be part of those who will get our exclusive notification whenever we upload another video quality like this. Yeah guys, now this secret I want to reveal in this video, it's something that is going to change your mindset. You can apply this same system on all market peers. It has nothing to do with, like, if you are trading gold, you can't use it on GBP/USD, you can't use it on EUR/USD. No, you can apply this same secret on all market peers, on all foreign or on all currency peers. Now, looking at the structure of the price action on GBP/USD, you can see that the overall structure on the weekly time frame is bearish, strongly bearish. Right now, if you scale it down to daily time frame, the overall structure as well is bearish, right? The sellers are the one dominating the market. Once you are able to determine who's rolling the market, you just have to keep on trading along with the rulers, because they are the one moving the price action at that moment. Now, looking at the daily structure of GBP/USD, you can see this overall structure is what is bearish. Swing high, swing major low, swing major lower high, swing major lower low. Right? Now, being able to do that, then you have to scale down to the lower time frame, right? That is 4 hours time frame, to also understand. You can see the major strong time frame, which are weekly and daily, they are moving in the same direction, right? They are moving in the same direction. Now, whatever the price action is doing on 4 hours time frame, the two higher time frames, which are daily and weekly, they are going to control the price action on the 4 hours time frame. Now, and if you also look at the structure of the price action on 4 hours time frame, you agree with me that the overall sentiment on 4 hours time frame as well is also bearish. Now, that is the first step. That is the first thing that you have to do by running a top-down market analysis from the higher time frame then to the lower time frame. Now, the first thing is to establish the sentiment, or establish market bias. So the next step now that you have to do is to establish key zone. If you are selling, that means you should be watching out for the resistance zone, the frequency valid key zone. Then the last one is our entry zone, right? Now, those are the three most important things that we have to understand when it comes to running a professional top-down market analysis. Now, after that, we just have to establish our key level zone. You can see that sometimes ago price reacted around this zone, right? This place was serving as support that stopped the price action from going down. The moment the price action started the journey from here to this place, the buyers took charge of the market temporarily to buy to this point. And if you also check the historical market price action, you can see that this zone is a very frequency key level where price reacted. Sometimes ago, price started a journey from here down to this same key level. Then the buyers took charge of the market and bought massively. Right? Now, the next one, if you look at this zone here, this particular zone as well was serving as a resistance here, holding the price action from going up. Right? The moment the price action started a journey here to this key level zone here, what happened? The price action couldn't break this resistance. Then the price or the sellers took charge of the market temporarily before the price action broke the key level. Now, if you look at another one, this place price reacted here, serving as support, then price bought. Now, that makes that zone a valid key level. So whatever key level or key zone you are establishing in the market, you have to take it back to the historical data to understand how valid the key level zone is. You must establish the number of times that this zone has rejected a price action. Now, after that, then that is when you have to focus your attention on what? On taking sell opportunity only. Remember, you have to establish who is dominating the market. On the weekly time frame, sellers are the one ruling the market because the overall market structure is bearish. On daily time frame, sellers are the one ruling the market, right? Then currently on 4 hours time frame as well, sellers are also the one ruling the market. You can see we have a perfect top-notch market analysis. There are times that the weekly time frame sellers will be dominating the market, while on daily time frame buyers will be dominating the market. But in our next video, we are going to explain that kind of market scenario. But in today's video, this is what I want us to focus our attention on so that we can get this secret very well. Now, remember, sellers are the one ruling the market. They won the election. They won the presidential election on all the 3 time frames: weekly, daily, and then 4-hour time frame as well. So we have to wait for price action to give us what? A pullback here so that we can take a sell opportunity. Now, if you look at the structure here, there are 2 types of structure. We have the major structure and the minor structure. So the major structure has the swing major high. Well, this is a swing major high, swing major low, swing major lower high, right? But inside this major structure, there are also minor structure as well. Now look at this time frame now. This place was the last highest point here. Then price sold to the latest lowest price level, right? Then price is about to give us a little bit of what? Micro or minor structure, lower high. So we might be expecting price to do something like this, or price to give us higher low, higher high, higher low, higher high, higher low. These are what? Minor structure. These are minor structure inside a major swing structure, right? Don't get it wrong. Now, the next thing that we have to do right now is to what? Allow the price action to come to our point of interest where we want to what? We want to buy. We want to sell. Sorry for that. Now, at this point of interest, there are a lot of traders that their system for execution is to set a limit order at a point of interest and allow the price action to do the magic. No. Some use sell limit order or sell stop or buy limit order or buy stop. I'm not saying that style of execution is wrong, but I'm not that type of trader. I'm a kind of trader that I love the price action to come to my point of interest. I want the price action to react at my point of interest. If I'm selling and the buyers are controlling the market temporarily, I want to see momentum loss. I want to see that these buyers are no longer having the much more energy to push the price action beyond my point of interest. I want to see the presence of sellers trying to kick out or knock out the buyers out of the market at my point of interest. Now, if you look at when the price action or when the market opened on Sunday, right, there was a gap, right? Remember, whenever there is a gap, market will surely come back and fill the gap, right? Now, if you look at the price action at my point of interest, now we're having indecision candlestick. That is a momentum loss for buyers. A serious momentum loss for buyers. Now, the next candlestick that opened on 4 hours time frame is dodgy. That's another momentum loss for buyers. That shows that the buyers, they are losing the battle. The sellers are trying to kick out the buyers out of this market. You have to pay attention to the price action. You don't just analyze, set your point of interest, then you are expecting the magic. You have to put in the work, understand the information the price action or the candlesticks are passing across to you. Now, looking at the next indecision candle or dodgy candle, let's look at the next candle. Boom, the sellers took charge of this market. Remember, the minor structure is what is bullish. Now, we want this 4 hours time frame to what? To correct to bearish structure, to align with the weekly and the daily bearish sentiment. If you change the chart to line chart, you see that we had lower high minor structure, then higher low minor structure, then we have higher high minor structure. You understand? The minor structure inside the major swing structure is bullish currently. So we need the minor structure to correct to bearish structure so that it can align, it can go in the same direction with the sellers that are ruling the weekly time frame and the daily time frame as well. Now let's change the price action chart to bar chart. Now you can see that we can't execute anything at the moment, right? So we have to exercise patience. Imagine that maybe we're trying to execute here. You understand? Can you see what is going to happen? Price action will have taken our stop loss. You understand? Trying to execute. That is the power of patience in the market, right? So right now, the price action now formed what? Lower high, higher high, higher low. Then we're having higher high. Temporarily, remember, the minor structure is what? Is still bullish. If you change it to the line chart, you understand? So temporarily, the buyers are ruling the market right now. So what we have to do is to wait for 4 hours time frame to correct to bearish structure. The next candlestick shows that what? The sellers are back in the game, right? Can you see how beautiful this analysis is? We have lower high, price from higher low, higher high, higher low, higher high. Then what? Lower low. Now I want to show you how I executed this price action or this analysis on Monday, right? Then the moment I realized that the price action is now back to bearish structure on 4 hours time frame, Then I establish my key level zone. Then I scale down to my what? To my lower time frame, which is 30-minute time frame, for me to execute the market. Now, the moment the price action break or change the structure back to bearish, then I have to pay attention to my lower time frame. Can you see what the price action is doing? Price action break this to give us a new lower low, so we are expecting a new lower high so that we can take a sell opportunity. Now you can see when the price action is approaching my point of interest, right? You can see that on the 30-minute time frame, the buyers are temporarily giving us a retracement or a pullback with high momentum. Look at the momentum candlestick here, high momentum as well. At my point of interest, I can't sell now because temporarily I'm seeing that the retracement is showing the heavy presence of buyers approaching my point of interest. So what I want to do is to make sure that this candlestick is not having momentum anymore. The buyers are not having much momentum or much strength to fight or to continue the journey anymore. So the next candlestick gave me that confirmation. The next candlestick gave me the confirmation that what? The buyers are no longer pushing the market. Now, can you see the momentum here? High momentum. Then the next candlestick shows loss of momentum. Right? The buyers are losing the market, are losing the strength or their energy gradually. That doesn't mean we should sell immediately, but we need to wait for another confirmation that now the sellers are now back in this market fully. So the next thing that I did is to wait for another candlestick. Boom. Can you see the formation of these 3 candlesticks? That shows that a presence of what? Sellers. That is what? Evening star. Or you can call these 2 candlestick here tweezer top. And if you don't want to call it tweezer top, you can call it evening star. And these 2 reversal candlestick patterns represent the presence of sellers at our point of interest. And if you look at this strong momentum of the buyers of this bullish candlestick, all of a sudden they lost the momentum. We had volume reduction here, weak rejections at our point of interest. And if we establish our Fibonacci retracement to around this zone here, you will see that when the price action approached our 50% retracement level, the price action is the buyers are no longer having the strength or the energy to push across the what? The 50% retracement level, and that gave us confirmation to execute our entry. Then we set our stop loss above the next Fibonacci retracement level, right? Then we are risking 15 pips here. We are risking 50 pips here. Then we target the next zone here. That is about ratio 1:3. So ratio 1:3, that should be 45 for 50 pips. Now, can you see now? So let's allow the candlesticks of the price action to play accordingly. Boom, price action hit or smashed our take profit zone. Ratio 1:3. If you are risking 1% on your Proframe account, you see that this is going to be a massive price action, massive top-down market analysis, top-notch market analysis. And if you have been blessed so far, please, we need the support. So click on the like button and subscribe, and also turn on the notification button so that you can get our exclusive notification when next we upload another quality video like this. See you next time, guys.